One of the great things I love about using price charts is it takes a lot of your opinions out of it, because what you're actually looking at on a price chart is the actual price, the actual direction. And you want that price direction to influence whether what you believe to be true or not true, right? So you can have a really strong opinion about something, but you want to kind of hold that strong opinion very loosely. You want to be able to shift and change your strong opinion when the data, when the evidence is saying your opinion is wrong. Now, the problem with this in so many sectors or industries or parts of our world is people aren't allowed to change opinions. In politics, if you change your opinion on something, you're called a flip-flopper. I think that was Karl Rove who introduced that idea. So now in politics, you can't change your opinion on something even if the evidence changes, which is probably one of the reasons why government is so dysfunctional. And it shows up also in academia. Academics don't like to change opinions because then they think they're going to lose face. Which is really interesting though, right? Because if you follow the evidence and the evidence changes, then that should help you shift and change your beliefs. But a lot of times in academia, you hold even stronger to a belief even when the evidence comes out against it. And there's been many, many, many cases over the last thousands of years, but let's just go with the last 100, where evidence has said something is dangerous or painful to the body, but the governing body of that sector, I'm thinking of like doctors, medical doctors specifically, where it came out very early that x-rays were actually very bad for the body, but the American Medical Association didn't change their opinions on who should be exposed to x-rays for about 2 decades. Hey everybody, this is RC Peck. This is my weekend podcast. And my theme for this week is kind of has to do with opinion, kind of has to do with belief, and kind of has to do with price charts. And the theme of this weekend podcast is, when is a bottom, right? When does something bottom? And so I want to look at 4 charts, 2 charts of the S&P 500 and 2 charts of precious metal mining ETF GDX to kind of look at, when do we know a bottom is a bottom? So first, let's look at this price chart of the S&P 500. It goes back about 15 or 16 months. And you can see on the screen, if you're looking at the screen, that there's 3 horizontal lines. The top one is at about that 1900 mark that I've talked about over the last couple months. And then the next one below that is at the April low, which is at about, let's just call it 1800 for really easy math. And then the very bottom one is at 1740. So these are the 3 major pivot points of 2014. And the market over the last 17 trading days has corrected intraday 10%. And as I write this, the market has about another hour to close. But as you can see in the little red circle I have there, when is a bottom, and when is it a continuation, when is it a hesitation? And so we have to actually let the market kind of work itself out a little bit. And let me show you a kind of a zoomed in image of the S&P 500. So this is the same image I've just zoomed in. Instead of showing you 15 or 16 months, I'm showing you 3 months. And as you can see on the screen, this was Wednesday. This is called a wick. So you have this really long tail hit all the way down here, but it ended up closing much higher. And then you almost had this kind of indecisive day. Don't know if we should go up higher, don't know if we should go lower. And then the market ended up higher. But notice that the market's still below the 1900 and still below, let's call it the 1800. So still, the market's kind of deciding, do I go back up and break above 1900? But it's going to have to test that 1900. So has the S&P put a bottom in yet? And I say no, we don't know that yet. And we have to watch how it acts to that 1900 line. Is it going to bounce off it and it's going to be like a ceiling in your house? Or is it going to break through it and act like another floor and move up higher? So we don't know yet that the S&P has bottomed. The other sector or index I wanted to look at is the precious metal mining index. And it has been hit pretty hard over the last 2 months. In fact, it's fallen about 26% since the middle of August, which is Unfortunately, in part and parcel, what a bottoming process looks like for precious metals, if you look at the screen here, we have a little over 2 years, or just about 2 years of data. But you can see that GDX has been bouncing basically between $20 on the bottom and $32 on the top, though it hasn't hit $32 for quite some time. And so it's fallen all the way down to that support that it had in December of 2013. And I want to zoom in on that little red circle to kind of look at to say, hey, has precious metal mining bottomed yet? And so as we zoom in, it's the same price chart I just zoomed in. You can see I really have zoomed into October, and you can see there's a red line at the $22 mark and there's a red line at the 20 mark. And that represents that big candlestick right here that happened 1, 2, 3, 4, 5, 6, 7, 8 trading days ago. So that happened last week. And GDX was up probably about 10, what was it? Well, intraday, it was a huge move, about 10%. And right now, close of day even, I just looked, GDX is still deciding. Does it move back up? Does it, bounce off that 20 and move up and get back into that channel? And is it going to break above the 32, which is, about 55% above where it is right now? Or is it stalling and it's just going to continue lower to gulp the $15 mark, which will be obviously 25% lower than the $20. So I'm going to be watching this. And like I've said many times before, markets, sectors, indices, asset classes can move much farther than anyone would ever believe, especially today in a very highly manipulated market. So I'm going to keep my eye on this. And the reason why we didn't back the truck up and put 50% of all of our money or 100% of all of our money into GDX is because it's still, we need a severe clean out, which I would call a severe clean out, one that drops GDX down to 15. But that hasn't happened. Maybe it will never happen. Maybe it will happen in the next couple months. But of course, or a couple days, I'll keep watching that, and I will send alerts to all my paid up subscribers to let you exactly know what to do. And just so much volatility in the market over the last 2 weeks. In some ways, it's kind of exciting. So really, the big takeaway is you want the price to really confirm your belief about something. So if you have a belief that interest rates should be going up, but the price chart just shows you interest rates going lower and lower, and you notice that interest rates in Europe and in Japan and in other developed countries are much lower than the US, then you're going to have something more than an opinion that interest rates should go higher, or there's a morality of them to go higher, because what's actually happening is they're going lower. But that's an example of you want the price to confirm what you believe. Hey guys, this is really just another step in securing your future, your portfolio, and your life. Until next time, this is RC Peck.